glad to have you. Maybe while we wait for Isaac to join, maybe you can tell us a bit about your background, about who you are, how you came to funding Guiker, and some background so people understand who you are.
Yeah, sure. First of all, thanks for inviting me. Give me a lot more things to do, during this crisis. I started my career, actually, I studied mathematics, computational finance, and then fell upon an opportunity at very early stage with Sonder. Back then, they were called Flatbook. That's how I got exposed to sort of real estate and also the startup world. I was mainly taking care of, their finances and modeling, pricing. And that's how I saw an opportunity with the student, especially international student housing market, because we were hedging a lot of the risks with the short-term rental market with the foreign student market in the downtime. With that exposure, I've decided, okay, maybe it's time for me to jump, to create my own thing and work on something that's that I've been thinking about for a while, and also leverage my heritage. So in 2015, I left Sonder and created this company called Guiker, where we mainly focus on the Chinese foreign student market and really help them find housing. But it took us a while to seek for VC, because initially we just really bootstrapped, proved the concept by doing mostly offline management. I knew Isaac through he used to work at Sonder as well. So we connected in 2018, talked a few times, and the deal got done only relatively recently in 2019. And so here I am.
Well, while we wait for Isaac to join us, let's unpack a bit about that. So you said you started Guiker in 2015.
Right. 2015.
So how do you know it was the right time? And how do you know it was, you were at Sonder or at Flatbook then? I'm sure the numbers even look good. So you were on a rocket ship and you decided to step off. So give us a bit more about what you were thinking then and why you decided to do it.
With full transparency, it wasn't just like, hey, I got this great opportunity. I think it was on both sides. First of all, I was hired very early on as a generalist, and as the company moves up very quickly, I was doing their accounting, their modeling, the pricing, and also some other stuff, right? So as the company grows, obviously I had to delegate, part of my work to specialists. For instance, I'm not an accountant. I have a CFA level 2, yeah. But not an accountant. So my and then that's I think my role will be reduced, and if I want to specialize, maybe specialize in the data analytical aspect, and that's not necessarily something that I was wanting to do. That's from the company's perspective, right? So, and then from my own perspective, I mean, yes, that the company is growing really fast, but again, it's not. I'm not a hospitality type of guy. I'm a very analytical guy, and customer service has never been, and it hasn't been my strong suit. Hi, Isaac.
Hey, Isaac.
Hey, guys.
So it's just not my thing. So then I think the time was. How do I know the time was right? Well, I didn't. It happened that obviously it happened in May because September is the school season. So if I jump out in August, it wouldn't make any sense. So I think I left there in that time. So that's
so was
story.
that May 2015 or May 2016 you left?
2015.
So then again, you said you decided to bootstrap. So I'll get to you in a few seconds, Isaac. I want to hear a bit more about this. So
hear this story too. Go for it.
I hope you know this story.
I do, but it's a good story. I want to hear it again.
So you decided to bootstrap, I think especially you go back to 2015, all the blogs are about, okay, go big or go home. Bootstrapping seemed kind of quaint, but you decided to bootstrap basically 2 to 3 years before you raised that first round. So what was the thinking?
4 years before
Oh
we
wow,
raised
four
the fourth
years.
round.
That's like
um,
20 years in normal person time.
yeah, I mean, after all, we're named after a turtle shell, in Chinese. So look, I mean, I did it mainly because I had because of the exposure with Sonder, I knew that I have a profitable business model, right? Now, and then the timing was kind of right in that sense. Like we needed an apartment immediately in order to rent it out, right? So spending time on fundraising. Number one, it just didn't seem like the right move to do. And number two is just, okay, how much dilution do I have to give up initially if I have nothing, right? No concept, no team, no track record. I think I'm a much stronger operator than fundraiser. So it was just like what I knew I could do, right? I did what I was good at. And after the first year, it's not like we didn't try to fundraise, but because by circumstance, I'm also the only founder, I didn't really have time to really focus on fundraising alone. So by virtue, like I needed to operate, right? I need to run the business, and look, problems happens all the time, and I had to fight crisis, and I had to sort of adjust all the time, and by dealing with those issues, I didn't really have time to really focus on fundraising. So it's both like, hey, a strategic, but mostly circumstance that made us bootstrap for a very long time as well.
Cool. So that's some great context. I'd like to cut to Isaac. Isaac, tell us give us a bit of your background pre being a VC, and then as a VC, what you're focused on.
Okay, I'll do it. And thanks for having us, Alex, and thanks for doing all this stuff to keep people sane in social distancing times. We appreciate it. I'm from the U.S. originally. I studied religion and philosophy, so I had no plan in life. But I joined a .com startup and dropped out of school for a year. So I've been part of the first bust, and just got hooked on technology. Ended up spinning that into a career in product management, first in New York. I spent a number of years in Singapore, 6 years in Singapore. Did startup stuff, worked at big companies like Yahoo. Married to a Canadian from Ontario. She's a professor. She got a job at McGill in 2012, 2013. And we moved to Montreal, which has been great. It's an amazing city, as I'm sure all of the people on this call know. Kept doing product management, Frank and Oak, Sonder. So Nan and I were like ships passing in the night at Sonder, because I think he left before I got there. And just participating in the Montreal ecosystem as an operator. And then in 2017, I had left Sonder, and Real, which I'm sure many people on the call know, is a very active early stage investment firm based in Montreal, but investing a lot in Ontario. I had built a relationship with the team there because Frank and Oak and Sonder were Real Ventures companies. I'd been involved at Founder Fuel, their accelerator, and so one thing led to another, and I sort of jumped over to the other side, and I've been investing as part of Real Ventures for about the last 4 years.
And what's your focus at Real? Because I think it's, if I'm correct, it's Quebec early stage. Tell us a bit more about that.
Yeah, totally. So first, the fund. So the reason there was an opportunity for me is that Real, which started really investing almost solely in Quebec, had kind of outgrown its original mandate as investing and become a pan-Canadian seed fund, which is great for us. It's great for our LPs, but the Quebec LP base is very focused on securing the financing chain inside of Quebec for obvious reasons. And Real's core seed fund is no longer the best vehicle to do that. So the LPs, was sort of a meeting of the mind between the LPs and the GPs here to spin up a new fund. It ended up being a $31 million fund, just focused on Quebec early stage, what we now call pre-seed, maybe a little bit of early seed. And so our LPs are pension funds, Quebec pension funds, and the government, and they want us to write direct checks into early stage companies. And we're also investing through accelerator strategies. This is sort of the Real Ventures way. So we invest via Founder Fuel. We became an LP out of this fund into Techstars AI Montreal and invest via that vehicle. And we use this fund to kickstart Front Row Ventures, which is our student fund where we give the money to students and they write 25K checks. And so we have all these different early stage strategies running out of that fund. So that's the That's the vehicle. And then in terms of what we invest in, it's a real ventures fund. So you could call that software focused, but ultimately technology and sector agnostic. We've done everything at real that software and tech touches. And this fund in particular, because it's now almost fully invested, so we can tell you it's about 1/3 traditional software, 1/3 applied AI, so some kind of AI powered software or hardware software combo, and about 1/3 deep tech. So we're doing a lot of investing into IP focused or IP driven companies, let's say, with IP coming out of the Montreal and Quebec university system.
So now we know both what both of you are doing. Take us about, I guess it's about 6 to 8 months ago, a round comes together. So, Nan, why don't you tell us how you went about raising the money, who you wanted to get in there, if what, and what attracted you to Real, if anything?
Yeah, actually, the dialogue between me and Isaac started probably 2 years ago, right? In 2017, if I remember, a little bit more than 2 years ago. At that time, I don't think we were ready to raise, but I just established a connection, with Isaac. And then in 2018, I think late summer 2018, I was ready to raise, and I was fortunate enough to also be acquainted to Julian Smith from Breeder, and he has sort of been mentoring me about the process. Because I spent a lot of time operating the business, I don't really have a network of investors beyond Isaac and the people that Julian made introduction of. And things didn't go as well in 2018. And I think partially it was also mainly my personal issues. I think I was overestimating or value and where we are at, and deals didn't go through. And
Maybe
then
I'm gonna stop you here and unpack a couple things I've heard, and then I'm gonna ask Isaac for some insight here. So,
right.
It sounds like you said you didn't have you don't have a good network or connection, but you still reached out to a potential investor a year before you first started raising in 2017. Was this what were you thinking, and why did you do that?
Because I wanted to raise. I wanted to raise in summer 2018, or at least fall 2018. And I reached out to. I only knew a handful of people in the VC world, at that time, and then Julian made a lot of introductions, and I think I talked to a few firms, including Panache, including Real. But that's about it. I definitely didn't have a list of 50 investors, and I still don't have a list of 50 investors. So but again, like we didn't come to a deal at the end of the day, and that's what happened in 2018.
So Isaac, why don't you tell me about how you view this introduction and the first reach out, and maybe why that first deal didn't come together? So for the founders out there, like why were you willing to talk? Did Julian intro help? Just give us some context of what was going through your mind.
Absolutely. So and I'll just say to start, like, this is an unusual situation. Like it I think it sort of came out with what Nan was saying, but like he was not, one thing you can do with VCs is sort of soft sell them. I'm not raising yet. Let me tell you about my business. Let's build a relationship. And that's actually, if you can pull that off, it can work pretty well because you build a relationship over time. Here, it was more of a traditional sell, like, hey, we're raising money. And I'll talk about why we took the meeting and why we were super interested in, but then it didn't come together. And Nan is the kind of like resilient, sort of never say die, push it forward founder that it sort of didn't come together. And then he just went back and grew the business and hired more team and built more software and like did all these things and then came back and pulled it around together. So it doesn't usually happen that way, but I think it's a testament to kind of the way that Nan works, that he was able to sort of take something that didn't work and then make it better. But in terms of like, why are we interested? So this deal, which is why it came together eventually, scratches like a number of itches for us.
So Isaac, before you get into that,
yeah.
So why did you pass the original time
it's a good question. For one,
there's only a few people here. You can be completely honest.
But we could not get there on valuation, which is to like, that's the ostensible reason, is we couldn't really come to terms. But I would say deeper down, if you can't get there on valuation, sort of there's something deeper where you're not there. Because if you really want to get a deal done, it will work out. And I think there were, I don't think, as Nan sort of put it, like, was he really ready to raise, in the sense, not get some money from some investors? This is a bootstrap founder who did everything on his own. And when you bring investors in, you get money and support, but you sort of have to give up as well, give up a little bit of control and bring people into the mix. And I think that's a hard thing for such a driven, sort of self-directed person. So it was about the valuation, but it was also like, it's not quite there yet in terms of building the partnership. And I think when he came back the second time, it's not just that we were in a better position to agree on terms. It was like, okay, now we're all ready to really work together. And I think Nan's mindset had kind of transformed, and so we could get things done.
So I want to go back to Nan in a second, but what I found very interesting there is the valuation. What you told me there is valuation is a more of an excuse than a reason. So it's, hey, if we can make it to a certain extent in valuation, cover the differences, but we weren't sure about the partnership at that point. So let's go back to
yeah, exactly. It's not the real reason, and usually if the deal has momentum, you will find a valuation that works for everybody.
Okay, so take us back to, I guess this was 2018. Then you try to raise money, you're not successful. How did that feel? Like,
I was well, obviously very shitty, I was very confident about it too. I even took a vacation during the fundraising, how confident I was. And then was my first vacation in years, So just to say that I was, and it's definitely an ego shot for sure. I think I was overconfident. I was, I think Isaac put it way too nicely. I think from my personal point of view, I was pretty cocky about it, and it didn't go through. And I not only is a ego shot for me, but most importantly, it was a failure to the team, right? No matter what type of excuse I can come up with or whatever justification, I think the team expected growth. And because of that, rather directly or indirectly, I had three very good employees that started this thing with me in 2015. They weren't even getting paid the first 2 months. And then they, subsequently left the company, not all because of what happened, but I'm sure that if we were growing as fast as Uber, they probably wouldn't leave, right? So, they subsequently left the company, and that was a big, it was a big shock for me personally as well, but we kept on doing what, one thing I think, from that with Bootstrap, that is that, you become very, very resilient to things,
So,
yeah.
Tell us about that. So you continued bootstrapping, and then a year later you said, let's go for it. So why did you go for it again? And why were you confident that this time would be different?
I think the numbers were better. I think we that's number one, and number two is I was in the more vulnerable position. I don't know what that exact word is. I was more, like Isaac said, I was, in my mind, I was ready to sort of let other partners that come into this business, rather than being the only person sort of running the show from A to Z, right? I think just more mature after this experience, having a different perspective on how things really work. I think no matter, and look, and it's not like I didn't have the advice, which, Julian walked me through the whole thing, right? He gave me a lot of these advice, but I think at the end of the day, for a lot of people, if you don't really jump into that hole by yourself, like you wouldn't know how exactly it feels, right? And that's what happened. Like, every single hole that Julian, told me that there's gonna, like, all the bad things that can happen, it happened, and I had to really crawl back out of it in order to really appreciate what it means, So went back, the numbers were better. I think we were ready to raise, and I was definitely in the much more mature way of the negotiation as well. So
and did you go to Isaac first? It sounds like
yeah.
you don't have. It says like you said, you don't have a huge list of potential investors. So hey, was Isaac the first door you knocked on?
One of the first for sure. I was also testing water a little bit because I had a feeling that I burned probably a couple bridges the way I conducted like sort of raised the first time. And yeah, definitely Isaac was one of the first person I talked to, and I think I approached him in June 2019, and it took another I think 2 months to really get the deal together. And yeah,
Let's jump to
uh,
Isaac. So
yeah.
Nan comes back, knocks on your door again. You looked at the deal before. So I imagine usually if you pass on a deal, it's not like you'll come into the next round or you look at the next side. So what again, walk me through your thinking, how you reacted and why you
Well,
did this deal now.
um, I wanted to do the first one. You know what I mean? Like we got pretty far down, and there was a lot of reasons. So I had worked at Sonder, so I was interested in prop tech. Uh, Nan's angle on prop tech was sort of different than what we'd seen, so that like he had sort of a contrarian take on how he was going to enter the market, focus on SMB landlords, don't take as much high risk as the short-term players. He wanted to focus on immigrants, which is like a beautiful thing, right? Like these sort of underserved market portion that other people don't pay attention to. And then he had this bootstrapping background, so like there was all these things that made us love the deal, which is why we kind of got far down on the first time, but then you could just see it was not going to happen. So it was one of those things where we were predisposed to get involved with this company, but it just didn't come together. And then when he came back, first of all, he came back, like he sort of just came back and said, and he kind of owned some of the things about what happened in the first fundraising. And Nan is like a very transparent, authentic, out front kind of person. So he's not like bullshitting you. And therefore, when things are good, you kind of believe what he says. And if something like didn't go well, you know he's going to tell you. So he kind of owned a lot of the issues, and that made me feel like maybe we're in a different position. And then on top of it, I mean, he's talking about the numbers. So the numbers were better. The software was better, like it actually worked and had advanced. The team was better, like he had some lieutenants that had been added that could really support him. So every aspect of the business had been pushed forward without any capital because he didn't raise. So it was like we were already predisposed. He made everything better. He came back with a different mindset, which is, as we said, sort of a more of a partnership mindset and ready to build a syndicate and go big. And like we already wanted to do it, so then we got it done, and we were able to, we're doing these pre-seed syndicate building, so it's like you got us, and then you get Panache interested, and then they want to do it, and then sort of things
The ball starts rolling.
yeah, exactly.
Cool. Just quick note to people watching. In 5 minutes, I'm going to open it up to questions. So if you have questions, you can just write them in the events chat or session chat, and we'll get to them. Now I'm going to take it. So you got a round done. This is what fall of last year.
Right.
So I'm going to take a few quick hits now. One is, what's the biggest surprise about working together? Like, Nan, you didn't have these partners before. So how's life changed, and what's the upside and downside of working with a VC?
I mean, to be honest, I think I compared to a lot of the other founders, I think this is something that I don't do very well right now. Like, is actually communicating with other people, especially VCs. Still, like, I think I have to do it a little bit more often. But one thing that I have to do, and which I will try to improve on, is that communication. Because I've sort of been the isolated, like the only guy running the business. A lot of the troubles, a lot of the things, I tend to just keep it to myself and not really seek for help. And obviously having these people onboarded, Isaac and all the other VCs and the investors, I kind of have to share more, right? I have to let them know how things are going on an ongoing basis. That's definitely different, and I obviously have more help, rather through networking or through, hiring and all that stuff. So that's all the main things that have changed so far.
Isaac, what surprised you pleasantly or negatively about working with Nan?
No surprises. Like Nan is on this spectrum of self-sufficiency. So we knew that he would kind of like go and do his thing and he would keep us up to date, but he would not, like, some founders lean on us much more heavily and we're happy there. Like we do sort of bespoke partnership. Like everybody's different and we have to make it work for that person. So he's played it about how I would expect him to play it. He does, you could be better, but you could be worse. Like he does communicate, he writes good reports, he loops us in. So there's more to do there, but he's definitely like learned at least the first rung of how to do that. And I guess, I mean, it's not a surprise, but now let's just say we're more in touch with our companies over the last couple of weeks than we have been ever, right? And so that's not a surprise, but Nan has been very proactive and thoughtful about how to communicate about what's going on in the company, how he's communicating with his employees, and being proactive with the investor. But like, hey, here's the challenges, here's the opportunities, here's what we can do. And so that, I'm not surprised about that either. But it's a pleasant thing to have. Like we'll ask every company what's going on, but we'd much rather have the company say, hey, here's what's going on, here's how I think you can help, here's our strategy for winning the downturn. And he's been great in the crisis, which is, I'm not surprised.
Let's talk about the crisis. I want to open it to the audience, but I just want to spend 2 to 3 minutes on this. So here you've got a company that's a prop tech helping foreign students find places, and you raised around about 4 or 5 months ago. So I guess you're thinking about, you have to raise eventually in 6 months from now, and I assume momentum is being hurt. So what the hell have you done to, how have you reacted? Like, what's different today than February 15th?
Well, again, for me, I think one of the biggest advantage of bootstrapping is that the resilience, right? Like it's not like we haven't run into challenges before, and some challenges are even more threatening to our business than what is going on now, like relatively speaking. Obviously not to the macro level, right? And another good advantage that I've been working with a lot of the people that we have now for extensive amount of, like, many years. So they trust the relationship that we have is very, very strong. So bringing them the bad news is relatively easy, there's a couple things. One thing that I've done very quickly is putting things into perspective, right? Like, is this good for our business moving forward in the long run, or is this bad thing? And for us, actually, our biggest challenge was inventory acquisition. Now, with the current situation, actually in the midterm and long run, it's great for our business, right? So putting things into perspective, we've got way more opportunities open up to us in the next once this virus is gone, and then once everything settles down. So if we put the timeline longer, not looking at next week or where things will get worse before it gets better, but if we put our perspective for the next 6 months to a year, it will actually be helpful for us, right? So then I just laid out a plan. Okay, how do we then as a company survives until that time, right? Another good thing is that we've been very frugal even after we raised the money. So we still have, again, very, very fortunate position compared to most companies out there, right? We still have, even doing exactly the things that we do today, probably around 10 months of runway, which is fantastic. Very, very fortunate. But that doesn't mean that we don't need to make adjustments. So because the relationship and the trust that I have within the team, I let them know the situation, and I asked for extension in terms of, I obviously reach out to the VCs for additional capital if possible, but at the same time we need to reduce cost, right? And so far I have to say, like really the team has been nothing but helpful in that, in the sense that, I think everyone understands the situation. We decided to not let anybody go because of circumstance, right? If everybody can still contribute, we should try to keep everyone. And the way we approach it is to have a across the board salary deduction, and we're in the process of implementing that as soon as April 1st. And people have been very, very even proactive, and some people even suggested 50% pay cut, which is it's unheard of, right? So really appreciate that, and to have a team that supports me into these decisions is incredible. So I would say that fortunately for us, we're in a very good position to not only weather the storm right now, but also take advantage of the opportunity that's coming in the next few months.
Cool. That's very insightful. Isaac, I'm gonna actually open it to a question I just saw come in because it'll be the flip side of this. So Chris asked, how do you think COVID will affect VC's appetite to invest in startups for the remainder of the year?
Great question. Hi, Chris. Nice to hear from you.
Hey, Chris, we used to work together.
And another ex-Sonder employee.
Yeah.
So, well, I'll put some caveats in because it like VC is a big category, right? And so first, are they late stage VCs? Are they Series A VCs? Are they pre-seed and seed VCs? In general, the earlier the VC, in my interpretation, the more appetite they will have. If they're later stage, their companies are being hit much harder because they're in market, they have high burn, they have high revenue. So more demand at the early than at the late. The second caveat is where is the fund in its life cycle? If you just closed a fund and you have to invest money, you're going to keep investing money because it's your job and you just raised a bunch of money from your investors. You might slow it down a little bit, but you've got checks to write and you're sort of happy to do it. Like for us, we're on year 3 of a fund. We didn't have that many checks to write anyway because we're kind of coming to the end of it. So we were naturally going to be more conservative, and we'll be a bit more conservative anyway. So stage, fund, life cycle, and then the third thing is what are you investing in? And for me, for example, I'm currently I already like to invest in deep tech companies that are IP focused and R&D focused. I'm even more drawn to invest in deep tech and IP focused because we're going to give them the money and they're going to go in the lab or whatever and build something. They're not going to try and sell it to anybody for a year or two versus a company that wants to sell products in a market that's been.
Isaac, is that because the milestones are hypothetically more in their control? So if they hit them, they can raise more money?
Yeah, there's no market-oriented milestones. It's like, oh, we made this big technical milestone and we could do it on our own. So those are a few elements, but in general, of course, it's going to tighten up. Like we are sitting on a big portfolio of companies. First of all, we just have to figure out what's going on with those companies. Then we have to tell our own investors what's going on with those companies. What's going on with those companies will change every 2 weeks because it's a fast-moving situation. So we have a lot of triage analysis. Then some of those companies that are in our portfolio, we're either going to have to step back and say we can't really help you because it's just too hard of a hit. Or in some cases, we're going to be the opposite. Oh, what an opportunity. Let's double down on this company. Let's provide them more capital. They can win the downturn. So all of that is distracting to our normal activities of meeting companies and hearing pitches. So for sure it will slow down because there's other things on the.
But what I'm hearing is early stage, you're still making investments, especially if you have a new fund, but it's going to be a bit slower, and where you emphasize your portfolio investments may change.
Absolutely, and valuations are going to come down. I mean, because valuations are a function of supply and demand. So if there's less supply or demand, whichever way you call it, but if there's less people bidding for these deals and they're all a little bit more cautious, then there will be less pressure on prices and they will come down.
I'm going to flip back to a question that Michael Page put up about 10 minutes ago. He asked, Nan, what was the difference? Did you get a higher valuation when you came back than you were originally looking at raising? Basically, how did the valuation change between attempts? You don't have to answer numbers. Directionally is good.
Yeah. Right. So I think that the valuation stays similar, but because we made more progress on the multiple side, it's a much better deal. So that's and I think that the level that we raise, it's still a very I mean, Isaac can probably vouch for that. It's a pretty friendly valuation, and which actually helps us especially in situations like this, right? If we are looking for additional capital, we don't necessarily have to take a down round to do that.
I just want to emphasize that point because we tell founders this all the time,
Yeah.
and they think that we're just trying to like get a better deal. And like, of course, we're trying to get a better deal. But if you carry a high valuation, it's fine as long as everything is sailing. But as soon as things get ugly, either specifically for your company or in the market, that valuation or the cap of your note or whatever it is can be a little bit of an anchor around your neck because you don't want to do a down round. So if you have more conservative valuations, like Nan is in a position where if he, and we're talking about whether there's an opportunity to put more capital in the company, it could be done as an up round or, flat or up because the first one was conservative. And that's a much different message to the world and to the company and to other investors than, oh, like, whoops, we did it at, a $20 million cap and now we're going to cut way down. So you got to find the price that's right for you and the dilution that's right for you, but do not underestimate that any valuation that you take or cap that you take is one that you have to justify in the future, even if things do not go well.
And just something I've seen in the market is YC's new batch are asking for amounts caps at about a third off what the last batch was, reflecting the current market condition and the worry about basically the worry about being able to raise an up round after that. Lots of questions here. I'm just conscious of a bit of time. So what we'll do is if the questions aren't answered now, I'll try to get the answers from Isaac or Nan and share via social media. Let's see which next one. I think there was a question about how sustainable are pay cuts. So I think you did do 50%, but you did 30%. So what's your promise to the team there, Nan? This is like, hey, this is for the foreseeable future? Will we pop back up to 100%? Explain how what made this palatable, other than belief in the company.
Yeah, and this probably might address another guy's, I think Charles' question about like that's for Isaac, but how long it will take with everything, So the first of all, the cut is that some propose 50%. I'm not imposing that 50%. I personally took a 100% cut for next quarter because I'm able to do that, and I'm not expecting anyone to come close to that. So the average cut that we're doing right now is 20. So that gives us an additional 2 months of runway, right? Which is for now that's the case. It might get worse, so that I have to do additional cut, and it might get better, right? But that essentially buys us time to weather the storm to see how things will actually evolve. The truth of the matter is nobody knows how long this thing will work, right? The optimistic side is that, hey, China, Korea is doing better, and I think the numbers that I've been seeing in Italy is stabilizing. So let's just hope that within 4 to 6 weeks, the coronavirus thing will be, going away. But how does the economy really recovers from all this is a big unknown, right? And then obviously that will affect the capital market. It will affect all different markets. So I can't really put a timeline on the salary cut for my people either. I can't say, hey, in 2 months, you're going to go back to normal, or in 3 months, you're going to go back to normal. We don't know that, right? But I think the important part, and I know this is what I stress with everyone on the team as well, is that, look, we have a relationship, right, that is transparent, that is honest. I can come to you with this difficult message and expecting you to give me all the feedbacks you need. So I also expect you to, let's just say in 2 months, in 3 months, or in 4 months, things are getting better. I expect you to come to me and don't feel like you can't come to me and say, hey, man, I think things are getting better. Can we go back to the normal, or can we go incrementally better, right? It's impossible to set a timeline right now because we don't know, right? But if we have that relationship with each other and we can have this communication and it's constantly open, then in 2 months we'll reevaluate. In 3 months we're going to reevaluate, and it might even go further down.
I'm going to flip it now to the person that's responsible for dealing with unknowns, Isaac. What are you telling your portfolio companies, right? So imagine you're saying, here's a target burn rate right now. Like, what's your informed decision right now?
We are telling them 18 months of runway is where you want to be at, if not longer. Some of them already have that. Nan, I would put in the middle. I think he has a lot of flexibility, so he could get to a longer runway. But 18 months to 24 is where you really want to be. So if you just raised a round, okay. But if not, you need to think about taking action, which is either cut or add. Cut is salary reductions, OpEx. It's been funny to see how much OpEx in companies is not actually required when you really think about it. So it's like, it's a lesson like, oh, I like, they come in the, oh, I'm cutting this CFO I was paying $5,000. I'm like, why were you paying him $5,000 anyway? So like there is some fat in some of these companies. So cut the fat, then cut past the fat to everything. Go remote, like cut like whatever it is, you're remote anyway. And then on the runway side, obviously reinvestment from the syndicate, but there's government programs, there's loans, there's grants, there's a lot of things. So like figure out how to get more runway or cut costs, or sorry, more revenue or cut costs. And in terms of seeking reinvestment and double downs and bridges and all of that, what we're saying is you go do all the stuff that you can do without us, like get your house in order, cut what you need to cut, add what you can add. And then when we know what the situation is, let's talk about whether it makes sense to add more equity capital into the company.
Cool. Gonna ask you for one quick comment each, but before I get to that, a couple things. We have a few questions. Even I see yours, Adam. Maybe I'll try to get a quick answer after this and tweet it out. Before I wrap up here, there's three things I'm gonna ask. One is if you look up there, there's a little thing called polls. If you go look at the polls and just answer some questions, we're trying to learn to make sure this is better. So I think we have 4 or 5 polls, whichever ones you answer will make this improve this. There's a question there that says, do you prefer evening events from 6 to 8 or 7 to 9? That's not about this one, but just general evening events. Once we're done here, we'll open up the networking session where you can go meet other people that are on this call or on this video. And, just before I wrap up, I'd like to actually ask Nan and Isaac one 10-second clip on like what can you do for your teams right now to help them through this? What's the one piece of takeaway advice that people should do tonight?
Okay, I'll go ahead. I mean, look, I think in a time of extreme anxiety and stress that we're living right now, I think most people out there, not just a workplace, but everywhere, people are looking for certain certainties, conviction. I think the good thing about our business and we've been long enough to know what we're doing, and I think overall, if I project that level of conviction and confidence that we are going to be okay, the rest of the team will if they believe you, then they'll have that certainty as well. Being able to communicate the difficulties, the stuff openly will so that also means that when you have a certain conviction that most people don't have, then people will believe you as well. So the best thing, I mean, this is not just for the crisis, right? I think honestly, like the best thing that we can do within the company is to communicate, and as really as frequently and as transparently as possible.
Cool. So frequent, transparent, clear communication often. How about Isaac? Any advice?
It's literally what I was going to say, which is the best practice anyway, and now even more. So the only thing I'll add is if you're the leader of a company or you're a leader of a team, make sure that you remember you have that role, which is to be transparent and authentic, but not necessarily to process your own anxiety or your own issues with your team. I'm not saying don't process your anxiety or fear, process it with your life partner, process it with your peers and other people, but understand that those people are looking to you for authentic communication, but also you're supposed to be the rock and the kind of the person who said we can get through that. And so that's not about lying, but it is about projecting a positive forward looking thing. And then if you don't feel that way, which is okay, because it's a crazy time, then go talk to someone else who doesn't work for your company and work through that. Because those are real feelings. And it's legitimate to be afraid now because there's a lot of crazy stuff going on.
Cool. Isaac and Nan, thank you so much for your time and your insight.